morning, everybody,
Good
on this
morning.
this holiday weekend or week, actually, not weekend. How is everybody doing?
Good morning.
There
Good
he
Good
is.
morning.
That
morning.
was a good game, Manuel. That was a good game. Packers gave it up, though.
Yes, sir. Christmas came early to Chicago.
Boy, I
There
tell
you
you, though,
go.
when they didn't kick that field goal on that first drive, I'm like, that's the loser right there. They lost that with 3 points.
The game was won the last 2 minutes.
Yep, yep. That was a good game, though. It was
Yes,
it
sir.
was entertaining.
It
So,
was.
congratulations.
Yep. Thank you.
Yep. But it looks like got
Hard,
someone else.
good
Someone
hard
else
work,
lost, though. It
Manuel.
looks like Green Bay will get in the wild card here, so that'll be good. So, are you
All
there?
right.
Yes,
Yeah.
yes. Good
All
luck.
right. He's just so happy he can't even talk anymore, Manuel.
I
Right.
am. I'm
Okay.
excited, bro.
I see Julie got into it too with the Bears. All right. Well, you got me on that one, but we'll see you in the playoffs, maybe. All right. Anyway, it was a good weekend for that. So that was fun. Good game. At least it wasn't a blowout one way or the other. Okay, let's get rolling here. It is a holiday weekend. So markets will close on Christmas Eve, which is Wednesday at 1 p.m. Eastern Time, 12 Central. Be closed on Christmas Day, opened on the Friday, and then Monday, Tuesday, and then the same thing, New Year's Eve, closing at 1 p.m. Eastern, and then closed on New Year's Day, and then the day after it's open. Um, Most of the big money uh, uh, largely has stepped away from the markets. You might see a few in there today, maybe tomorrow, but most of it is gone and not going to be around. So I don't typically trade during this week because I have my plan set up for 5 days with regular market structure, and we're not going to have that. When big money's in, they provide some depth, thousands of buy and sell orders at various prices, and that all disappears over the holidays. So we have diminished volume. That leads to wider bid and ask spreads, false breakouts, gap risk, and that's for that reason. It doesn't meet my trading plan. So I focus more on what am I going to do next year. We got two weeks and have a little time off and hang out with your family if you like your family. If you don't like your family, don't hang out with them. And hang out with yourself and your friends, and just kind of let your brain come back. Now we do have possibility of Santa Claus rally because retailers about the only ones going to be playing the game the next 2 weeks, and they tend to buy up, which is okay. But I plan to stay out of it for that. I also hear the federal government, if you are working for them, they're off Christmas Eve, Christmas Day, and the day after. So I think the Trump administration signed that into law, temporary federal holidays for those. So if you work for them, good. You get a 5 day weekend, which is awesome. We saw some increased volume on Friday. We talked about the quadruple witching of the options, and we'll show you the charts, and you can see how the volume popped up on a lot of these stocks. The Dow closed up 180 points, Nasdaq 273, S&P was up 57 points. However, when you looked at market breadth, advances were only 51%, 44% decliners, so still right there in that middle. Under the trading over the 50-day moving average was about 48.7%, trading over the 252. So we're still sitting in that middle area, on market breadth. We're not really seeing it take off one way or the other, up or down. And we've been that way for a while. Oracle had a little bit of a price bump on Friday, if you remember. ByteDance signed a deal to create a U.S. TikTok joint venture with them. So, last week Oracle was down. We had issues with canceled contracts or with delayed data centers and went down. So it popped up a little. We'll look at that chart too. We had some pharma stocks climb a little bit. There was a deal announced with the Trump administration on cutting prices on pharmaceutical drugs. So you saw a little bit of bumps on Merck and BMNY, Gilead, Amgen, and Novartis. CrownWeave or CoreWeave rose. Citi analyst noted that the company is staring down overwhelming demand. So you saw that pop up. It was on a Citi note. What else we got? Oh, cruise line stocks jumped Friday. The Carnival CEO said demand is resilient. So you saw Carnival and Royal Caribbean kind of move up on Friday. Nike went the other way. They had a revenue beat estimates, but profits declined as the company faced Dual headwinds from tariffs in China, and that also dragged other footwear companies down. Uh, and then I think that's it for the market news from last week. This week will be slow market news unless something happens, something big. But you see we're up a bit. Uh, should be lower volume today. We'll see how that all works out. Let's come down here. Gold and silver and some of the metals have really popped up. I was watching that last night. I'm sending Trent some futures charts last night on silver. Silver actually was above $69, and it's an amazing thing. We'll take a look at those charts too. So you pop out of this, and we'll go take a look at just this heat map. And this isn't from Friday. This is from last week. Okay, so this is a whole week of what we saw, and you see, pretty good strength in some of the mags, Amazon, Microsoft, Nvidia, but Google and Apple down, Broadcom down. So kind of mixed in there. You don't see really big green pockets anywhere. There's a little bit in industrials, a little bit in restaurants. Okay, with holiday season, some tobaccos, up a little bit, but other than that. Software applications look pretty red in this area. Also, insurance and financials look red to down also. Go back up, and I'm going to go over kind of the year real quick. I can find it here. Here we go. Just on the paper trade portfolio, okay? So again, I'm just 50 weeks we've traded. You can go back and look and see. And we have our rolling tab over here. And so I just kind of went over it on the weekend and, looked for some interesting things. On our watch list, our best swing trade was Datadog way back early, up 22.77%. So that was interesting on that. You can see we didn't get all green. We got reds. And when we come down to it at the end, the 2025 total, when I total all that up, $35,000. Or about $703 a week. That's 50 weeks, not 52, since we're not doing these last 2 weeks. So again, put in some lists. We don't trade them all, just one or two, and we get in and we watch them. And so you can actually make some pretty good supplemental income if you get to know how to do this and do it well and put in your trading plan. And you don't have to trade 60 of them at a time. You don't trade 40 of them at a time. You can trade one or two a week. And, my plan, the way I do it is I deal myself some cards and I put them on a watch list. And then I play those cards for the week. And if they continue on, I'll roll them over to the next week. If not, I'll get out, take my profits. In most weeks it works, and other weeks it doesn't. So again, good supplemental, but you got to learn how to do it. And on the other, the 200, our best one was Whirlpool. If you remember that one, up about 30% on Whirlpool. And these are just paper trades with assuming we do buy 100 shares each on each one. So 100 shares is a typical lot that you would have. When you go and buy in the market makers, they like to work in hundreds. So if you put in a 25 order, they're going to probably team you up with someone else, and your order might be slower, might not all process. That's why I use hundreds. But again, when we come down here and we look at about 28,000 or 560 a week on the under the 200, here we kicked in. This end of the year was kind of interesting with the flatness. But we kicked in a lot of 2% on the bottom side and saved you a lot of money. So I put something out on my Discord about trading, and it's not how much it goes up; it's how much on the bottom side you don't lose. Okay, if you can cut the losers and let the winners run, you do so much better. And then we added some of these in here on the Paul Tudor Jones investments. These were only we look at it, we hopped into these when it crossed the 200. A lot of them in May and June. So this is like less than 6 months, 6 to 7 months of one trade. Basically, you see on the indexes, 100 shares each, what you would be. It's Mag 7s, you'd still be out of Meta. Okay. But again, this is, we're looking back into, May, June, September. So, you don't have to even be a real big technical trader using the 200 here. We'll expand this out a little bit. Here's your sectors. Okay, if you did $100 in each sector when it crossed the 200, using some rules, and I'll put those rules out next year so you can see what I use for my rules. But but you can do pretty well, and then when it hits under the 200, you're out. You're out, and then you kind of want when you're close, you got to watch this too when you're close, uh, and when to get out. So anyway, it was a pretty good year. What else do I got? I kind of did some totals. So the total, if you add the swing trade and the under 200 swing trade together, it's about $63,000, uh, $1,264 a week, $5,200 a month. So not a bad run on there. So you always want to track what you do, and then look at it at the end of the year, see if there's anything you can change or do differently. Update you got 2 weeks now. Update your trading list, up your trading plan, update your investment plan. Go out and start planning for next year. That's what I use this 2 weeks for, along with hanging out with family and other things. Okay, we'll look at some charts real quick. Okay, get this up. There we go. Sorry. Dow Jones, again, we were up, had a dividend on the DIA, but we were up, but right along resistance. We're going to open just about the same place we opened. You can see we're still, volume was okay on the Dow Jones, just straight over for the week. For the most part, a little bit of a negative crossover on the Dow. Again, 30 stocks based on price, not market cap or any of that. And you see we're still kind of not there on the oscillators yet on the Dow. And we look at the SPY. Again, on the SPY itself, kind of even on the momentum. Again, we're sideways, still sideways, even though we're going to be up a little bit today. We're right along that resistance level. Again, negative on the MACD, a little bit of a cross possibly on the stochastic, and we're gaining a little momentum on the SPY. So we may see these go up a bit over the next 2 weeks, just because of the lower volume and who's in the game and who's not in the game. The Qs, same kind of thing. I mean, we go across over here. You can see how they're all kind of run together. Not quite there yet on the MACD. So again, we're right up on resistance. So nothing too exciting in these indices for me. Gold, like I said, the metals have kind of taken off. You've got these rate cuts, and they're thinking they're going to have more rate cuts. And when you have money that's not making as much in interest, then people will take it out and put it into gold, because gold doesn't pay a dividend, or metals, but they do move up and down in value. And so that's where you see a little of that. And you also see a lot of this because of the demand in some of these metals for both electronics. And if you looked, I looked up how much, like in silver, goes to new data centers, how much, and it's like 2 to 3% of the production of silver is now going to, all the components within a data center. So that's more increased demand too. So you think about even gold, they use gold as connector points. I forget how much gold is actually in your phone and silver, but it's quite a bit for what you have. So with increased data centers, it's kind of a play on AI too. But again, it's also a play on real money. People use real money, gold and silver, consider a safe haven when you think things are not going to go as well. So you see gold going to open up a little bit higher up here. Again, the oscillators are all up. Silver, they always call this the poor man's gold, silver, but just nice on a nice run. This is, gold was kind of sideways, and silver's running up. Silver, I think, when I looked at it last, was above $69 an ounce. And it's just some of that came back from, we talked about last week, JP Morgan. They went from a short to a long position. They took possession of their gold and stuck it outside of the COMEX vault into their own vault, causing kind of a demand supply squeeze there. So we'll see how this keeps going. And we looked at some of the others, silver, as a paper, what they call paper gold. You're supposed to be able to turn your paper into COMEX and get your gold out or your silver out. Well, if it's not there, then they have the ability to just give you whatever price they want. So you had to watch out, kind of on that one. So we went in last week, we talked about PSLV. This is a Canadian mint. They're all audited according to what I said, and always do your own due diligence. They're audited, and their gold, their silver is supposed to be there. So this may be the way you want to roll on silver. From physically owning silver with paper, it seems like these guys have it, and you can see it's a little bit cheaper too. But again, watch your indicators and such. We also have we were talking last week. One of our uh, members was talking about palladium, brought palladium up, PALL. Here's palladium, really kind of rolling up too. We look at copper. A lot of copper goes into a lot of kind of hitting some resistance on copper. And then we have, let's see. Let's see if this is right. Yeah, platinum. We have platinum also, PPLT. So you're seeing a lot of money going into the metals. So be careful. Watch your oscillators and your indicators, and remember you're above the Bollinger Band here. So probably pull back in. You're hitting up here on platinum. You're hitting a little bit of sell orders in there too. So Bitcoin. Bitcoin is looks like it's coattailing on some of the movement into sound money, as they call it, as we've come up now, and we're right at just about 90,000. We're at 89.8. You can see above the 9 a couple of days. We talked about it. We talked about this crossover on stochastic, and then we had a crossover on the MACD. So slowly but surely, you want to get above in between the 90 and the 95. And again, here you have a hard resistance at the 50. We'll see if we can get past that. But Bollingers are still, narrow and kind of converging, but we have good movement on the oscillators. So that's, these are past indicators, and we'll see what it does. But we're seeing a little bit of a bump up in the 89s. In the 90s we were in on Bitcoin. Ethereum's kind of the same way. It looks like the same chart. You're going to come up on the 50, and there you are in the oscillator. So, as one goes up, we see the other one go up. So they look correlated at this point. And MicroStrategy, of course, we're going to open up right below the 9. Now, MicroStrategy needs to get above that 9. Well, here's your support level, which we've hit 5 days in a row, and see if this can pop up, get above that 9, and catch a little bit of a bid. We don't have a crossover yet on the stochastic, but we're still above on the MACD, which is really kind of strange when you think about it. It's kind of an anomaly out there. NVIDIA, same thing. We're just looking flattish on the video. I'll take it out 9 months. But look at the volumes. Look at the volumes on Friday. We had, of course, quadruple witching options expiration. So you see a lot of that. But it popped it up to a pretty good size volume on Friday compared to where we were. And again, but we're still kind of sideways. As you can see, we've been kind of in this mode since the end of July. And then we look at Meta. Meta keeps trying to get past that 200, just hit it twice. Okay, so it keeps hitting its head. We're right on the 200 and the 50. Oscillators aren't quite there yet. You can see, look at the volume we had here on Friday. Of course, triple witching and other things. End of the year for some people trying to move some stocks around, make their portfolios look better, or they take off to Vail or wherever they go to spend the money that they make off of us. Microsoft, same kind of thing. Microsoft, did you know Microsoft could actually be getting into kind of a swing trade here? I'm going to move in a little closer. Got it above the 9, candle above the 9. Going to open up just right above that again, but we had big volume again on Microsoft. But the oscillators are looking pretty good. I'd wait, and get at least a 50 on some momentum here. We've been at this level before. It's got to pop up, and then of course you got the upper Bollinger and sell orders in the 50s. So you got a lot of defenders there to keep your price down. So, but in this week I'm not trading it. It doesn't look that strong to me. But for some that are purists, you might take a shot at it. Apple. Oh yeah, Apple just, I don't know what, even with this volume, look at this volume. We just had this little candle. We didn't get above the 9. We didn't get above resistance. We stayed right here. You got the lower Bollinger and the 50. We're just hoping we don't go below that 50, but huge volume and really no movement on price. Amazing. Again, options expiration. Amazon. Second verse, same as the first, sideways, since about middle October or November. A little bit of a crossover in the MACD. Looks like we're going to cross a little bit here. But again, you got pretty good levels of resistance above you and parallel Bollinger Bands. It just doesn't have anything that wants to zoom it over the line at all. Google, same thing. Yep, you still see the volume. Google doesn't have a confirmation on the MACD. We're down at the bottom with a little bit of a cross, on the stochastic and the RSI. Just a little bit above 50, but still sideways. We're stuck on this intermediate resistance level. Tesla had that nice run up and hit right into resistance for 4 days in a row. Now you're seeing the Bollingers roll over right here where the sell orders are. Seeing the MACD or the stochastic crossed, 4 days ago, right when we hit resistance and heading down, and that usually moves this down. We're starting to see the histogram go down on the MACD again. So we've kind of hit our head here on Tesla. Palantir, nice little run. We're still rolling up. Right here is resistance, and where we're going to open probably right on resistance. A little bit more volume on Friday, as we've seen in some of the others. And then Netflix. Netflix has come down. This is the one I'm kind of watching. Come down, hit support several days. The nines come down. Hasn't gotten over the nine. Look at that squeeze in there between support, which we've hit, and the 9. And so we can pop above that and get the confirmation on the MACD and get this stochastic movement. We certainly have a long way to go on RSI, which is momentum. We could roll along here for a while until we start seeing some of that momentum pick up. But potential swing, not there yet. But potential is. But I just wait on that one too. I didn't put any list out for any trades. But if someone wanted to, and here's SoFi, one candle right above, not much on the upside. You got, you're right on the 20 for resistance, and you got 50 on resistance. We don't have any confirmation on the MACD yet. So, I mean, very weak from my point of view on a swing trade based on my trading plan. NCLH, we talked about cruise ships. This is nice. Got above the 200. Came back tested like we want. Back inside the Bollinger Band and took off. You got some sell orders, 23.79, and you got intermediate resistance at 25.03. So, nice run on MACD, and same thing on Royal Caribbean. Boom, same thing. It looks the exact same chart. You got some room to run along the Bollinger Band. Always put your stops in. You're above the 200. You're above the 9. You're above, all the major moving averages. That's volume pop. So again, cruise lines were looking pretty good. Wisdom Tree too. Got above its 200 sideways, and it's got a little bit of running room now. Got above the 50, which is a good line of resistance, now support, and the oscillators look pretty good. So if you're into trading, these are some you may want to put on your list. Again, I'm in no hurry. End of the year, less volume. Doesn't meet my criteria. Under the 200, only a few. Mondelez. Okay, it's been flat. It kind of looks like Netflix, but big volume, but didn't do anything. We had a lot of big volume, didn't do anything, mostly probably because of options. What I don't like is I don't have much of RSI on this one. So again, it's under 200, more risky anyway. And that's about it on that. Let's see what else we got. Oh, we'll look at a few. Donald J. Trump merging with a fusion company. Okay. So you saw a bump on there, but right up to resistance on this one. But, news comes out. That's an unknown market condition. Caused that stock price to roll up. Nike came out. They had a good earnings, but they talked about China has really slowed down. And you can see news. We knew that what we knew was we are going to have earnings. What we didn't know is what those earnings would be, which is why when I trade, I try to get out so I can avoid this. But we come right down to right above basically support, and you can see what happened to all the oscillators on Nike. But we've come down. We've kind of crossed, even over the line where we saw some support before down. We'll see if it makes any moves up, but big, huge volume on Nike on the downward trend. CoreWeave. A lot of you guys, of course, CoreWeave, got an upgrade by Citi, so that was a nice move up. Still, not a full candle above the 9, but moving on nice volume. Oscillators are starting to move up, so it may be a possibility of a swing trade. You got resistance on the Bollinger Band. You got some sell order resistance. You got resistance at the 50. But again, we've come along, kind of went up, came back down. So we could do another one of these ups and downs. That was a news based uh, uh, gap up or not gap up, move up on price action. So today, we may see it come back down, we may see it roll up, touch that Bollinger Band. Oracle, poor Oracle. Oracle just it had a little bit of a pop. We're still kind of flat on everything. We're starting to see a little momentum come back, but right up on the 9, and then you got sell orders above that. So, we've been here before, back in here. So don't get too excited until we start seeing more momentum on Oracle. Broadcom, again, same kind of thing. Came back up, but we're right on resistance. Don't have anything on the MACD. We're still flattish on this on the stochastic. Not much on momentum in the Broadcom. So I kind of wait on that one too if I was interested. And I think that is all I have for this holiday Monday. Trent.
Right. Let's just real quick hit on some let's talk a little bit about, see if I can move this over a little bit. The metals world. Since one thing I want to look at is more of the longer term point of view. So I'm going to show you some weekly charts of precious metals, some of the different other metals in areas, and some to look for as we go into, from a technical standpoint, into the new year and more of a longer term point of view. But some common things that we've seen since the beginning of really 2024 through this year. And when you look at gold, I'm using the trade trend line here, the intermediate trend line, which is that yellow line. The trade trend line is that white line, and then Tudor Jones 200. And I'm looking here, and this is a weekly chart, so I'm looking in a bigger period of time. And one thing you notice is this real tight range between the trade trend line and the Tudor Jones, and it's really just tight for a number of years. And then it starts to expand as you get into February of 24 into 25. This difference between where the trade trend line and the Tudor Jones is starts to expand out. And so when I look at this, I'm like, hey, this is a behavioral indication of where money is possibly flowing over a longer term period of time. And so when I look at this, I go, okay, well, if I had noticed this back here in 24 and I kept up with this, I would see this expansion or this widening in the gold sector. And this would have been a really nice place to be if you had bought in, say, February of 24. You'd have paid $182.89 for it that week, and you would have ridden it up to where it is today at 406.89. Now, when I look at this, I look at it and I go, okay, it's hit some resistance here, hit it in October, the week of October 20th, and we're back at it again, right around that $400 mark. Looks to open up at 406. We'll see where it closes this week. But look at the difference between where the stock price is and the Tudor Jones 200. Whereas if you look at it here, it's super tight. So what you should be looking for is, where is that longer term opportunity that you could identify when a stock price moves away from, on the north side of the Tudor Jones 200, the trade or the intermediate trend line, and trails up. So this would have been a great opportunity here. If you look at silver, something similar. Back in 24, you would have seen this tightness for a long time. And then all of a sudden, back here in May of 2024, it started to widen a little bit from the 200. And then in March or April of 25, then it really widened out. So when I'm looking at this, I'm going, okay, here was the opportunity right in this range. Where it is today, if you use mean reversion as your sort of your guideline, you would look at this and go, okay, the where this was back in here in May of 24 to where it is today, this is a massive expansion. So would this be a good buying opportunity from an intermediate to long-term point of view? In my opinion, no. I would allow this to peter out a bit, maybe come back down towards this trade trend line, or more like, more, bigger opportunity would be this intermediate trend line would come down, the stock price come down to the intermediate trend line. So when I look at these massive expansions, what I'm looking at is, okay, eventually the run is going to run out. It's eventually going to come back. And so when you're looking at it from a longer point of view, you're looking at a weekly chart, you see that palladium, similar situation. You go back over time since 23, goes sideways, sideways. And then all of a sudden in May of 25, massive expansion higher, widening of between where the stock, the ETF prices or palladium prices versus the intermediate and the 200. So when I look at these, I'm like, okay, this is a lot of overextendedness and possibly maybe you get a little higher. I mean, you're going to be up 10, $9 this morning, but at what point does this candle say, okay, I'm about to pivot and reverse downward and come back more towards that mean? Um, Here is palladium, similar situation going back to June of 25 of this year. You're starting to see that expansion, big move yesterday or last week, volume wise, not super big, but you saw that sort of initiation here in October of 25 into this week. If I sort of break this in even more so, I can see during 2019 through 22, massive money, move into palladium. Could this be more of a longer term indication of where money is flowing versus where it's not? I mean, you think about this, March of 22, it fell, went sideways up until June. Well, what went up? Equities. Equities went up during the same period of time that palladium went down. So we're now seeing a move higher. We're above the Tudor Jones 200, above the trade, and above the intermediate. What we want to see is that continuation higher. So this could be a more longer term. This could be the one of those plays for 2026. Copper miners, similar situation. I mean, this goes back to 21 actually, but you're looking at this major expansion from the April lows of 2025, move higher. Are we going to run out of steam? What is copper mostly used in? Housing, that's a big part of it. You could see if we do not get mortgage rates to come down and we see a contraction in housing prices, copper could lose its run and come back down to earth and come back down to more like a $51 range where there's or 50, say 45 to $50 range for support. That would be a better opportunity. But that expansion in a commodity could have been a nice play in 2025. Steel, we're seeing expansion or move in SLX, which is the steel ETF on a weekly chart, that move higher. So we want to, from a more intermediate to longer point of view, use your technicals and look for opportunities where there's mass accumulation and then an expansion, start to move up in that widening, sort of that megaphone kind of point of view. Batteries, lithium, still in that downtrend, just broke over the 200 a couple back in September. So I'd be cautious here, but why would, lithium battery technology be an opportunity? Not a lot of volumes, about a $500,000 or 500,000 volume, gets very low back in this area. So be careful of that. But this could be one of those more intermediate to longer term plays. Another lithium battery one, similar scenario, looks the same. Copper, nice move higher. It's just trending higher. You came down the Tudor Jones 200 back here in 23. You continue to move higher a little bit. Got some potential resistance here at 35, but just look at these long intermediate trends. This is where you can build a core portfolio around it. And I'm curious about soybeans. Um, soybeans on a downward trend. This is not something I would jump into. Had a nice run through the 2020, peaked out here in 2022, and then went south. So when I look at something like soybeans or copper or some of these others, this could be a leading indicator to what is coming economically in the future. You've seen, you know, silver, I think, is a little plagued by JP Morgan, and they're taking what 750 million ounces off the market or something of that sort, I think it was. So
Yep,
that's
close
less
to it.
supply. Yeah, you have silver is used in a lot of the electronic developments, or electronic products, that kind of thing. But you look
Solar
at that
panels,
mass expansion. What's that?
solar panels.
So solar
So,
panels,
yeah.
I don't see that being super popular anytime soon, but anyhow, could be. But I look at this and I go, okay, where would I want to get in here? And this is back in this area where all the my moving averages are tight, and then they start to expand, and that's where you capitalize. So use that, the mean reversion theory as a part of your process from a longer point of view. If I go over to SPX or SPY, and I look at it from a weekly chart. Let's see if we can get this all to fit in here. And I go back 5 years. Nice. Where would you have want to really be heavy in SPY if that's all you traded or all you've invested in? Like Mark says, you come down that Tudor Jones 200, it just trails that. All the different moving averages are tight, and then they start to expand. So question is, how much expansion is too much? And you can always go back in history and just get an idea of what that looks like. So using some of these moving averages, so back here, tight from 15 through 2018, sort of peaked out in February of 2020, and then started coming back towards the 200. Now, granted, you had a little bit of a sickness going around the world during that period of time, but these are kind of things when I look at this, the mean reversion theory behind everything eventually comes back to the mean. SPY could easily be one of those, or the indexes could be an indication of where are we headed in 2026. So using the commodity markets as a leading indicator economically, allocating or not overweighting, underweighting commodities as part of your overall long-term portfolio could be can be a very powerful long-term core position in your portfolio. I was asked about why SLV in where is it? In the sorry, I'm trying to get to refresh. Um, in the core portfolio, the subsector core portfolio versus the um, the sector portfolio. The sector portfolio is about very concentrated in a handful of areas, whereas the subsector is getting into the subsectors of the different areas. So it's a lot more volatility in the subsector area core portfolio versus subsector. And the question was why SLV in the subsector one, but not in the sector one. Well, right now my indicator is saying on more of a broader base, XLK still is a play versus SLV. SLV is more, that's the healthcare one, is more less rate sensitive. It has a very high concentrate, it's a higher volatility potential, but from more of a opportunity on, I would say, more of the next 6 months, it's a better it's a better opportunity over the next 6 months. XLK, I suspect in the sector portfolio will rotate out here in the next couple of weeks as we get some data and some more potential weakening in the tech sector at this point. So you're possibly going to see that change, and you'll see XLV, the healthcare, show up in the sector one. So more volatile on the subsector core portfolio versus the sector one. And I've considered just consolidating it to one. Um, but it's when I did the sector one, I had kept in mind was the person who's coming to Best of US investors with maybe 2,000 or $3,000. So keeping it concentrated, less holdings get more bump in it, versus more holdings in it, with more money, you're able to distribute it a little bit more and get more, granular versus macro in a sense. Hopefully that helps a little bit. But a lot of data is still delayed. We're not getting full data, so I suspect in the next couple of weeks we'll see a change in that, and we'll see some changes in what phase we're in, as well as what the allocation, the core portfolios will be. So I'll keep you up to date as that goes on. So, all right, well, let's open it up for questions and comments, charts, or anything.
Yeah, got a few chart requests. ADUR, which is Duro Clean Technologies. And the first thing I look at is had a nice bump on volume on Friday, but normally the volume here is really lower than I would want on a trade. Okay, we're 300,000. Again, we get into that spread issue. I also have a negative crossover with the MACD. We already have a crossover negative here on the slow stochastic, and the momentum is really low. We are above the 200, but we're hitting right on resistance. So a lot of strikes against it based on my trading plan. I want to go back and just take a look 6 months back and see what we look like here. Earnings, negative earnings on this one over here was negative earnings. So they're not making money, at least the last 2 quarters. They are above the 200, and did come down and hit. From a trade point of view, the gauges aren't telling me that to hop in at this point. And again, the volume's pretty low on this one for me. But it is against above the 200. If you would have got it in at the 200, and I'll go back a year and see where that might have been. Well, it looks like right back here in April, you got in after when everything started coming back up at 541. We're 1178. So then again, you just used Paul Tudor Jones 200 on this one. You'd still be in it, and you'd be up, double basically on that. But right now, I would wait. This would have been maybe a good entry on an investment. Okay, not so much on a trade. You could add swing trade here, but again, the volume would have kept me out of a swing trade on this particular or this particular stock. Also, Pat wanted to look at United Health, one of our old favorites. I'm going to go back 6 months on United Health. Oops, maybe it don't want me to go back. I'm going to go back a year on United Health then. Been kind of sideways, United Health, ever since, we had this big dump and we watched it. So, okay, watch out for United Health. And then I think this is about when Berkshire got in here or here. And so Berkshire got in pretty good, but still sideways. And I'm going to get a little closer. You see the oscillators are off. Let's get a little closer here on United Health. Go to the 3 month. And it's just having trouble getting over this 50. And we're right on this resistance level. And our oscillators are looking down and to the right. It looks like we're going to have a negative crossover in the MACD. So for a trade, no, wouldn't interest me right now. For an investment, I'd wait for this 200 or the 50, whichever one you wanted to kind of go over on United Health. Okay, then I have the same question on what you were talking about, Trent, on these ETFs. I'm going to stop this and I'm going to change charts. Okay, I'm going to go to my more long-term investment chart. Okay, and I'm going to come back up. And let me put this in. Hold on, patience. XLE. Okay, let me come back. Get in here. Share. So I've just changed this chart. This is more long-term, and all I have is right here, the 200-day simple moving average. Okay, and this is XLE. You want to know, well, is this a good time to get in? And again, I'm looking at the 200, and this is energy. Energy is tough because you can see all the volatility in energy. All of a sudden, right here, let's say OPEC comes out and says, "Oh, we're going to turn on all the spigots and we're going to fill the world with oil." Price goes down. Over here, somebody just took over, shot a rocket in the Red Sea and hit someone's tanker. Oil goes up. I'm going to put a tariff on something, and it goes down. It's very volatile, as you can see. So again, just on the 200, you'd have to be careful, but and I'll put some rules out here, by the beginning of the year. But here's your 200. You're rolling, rolling, rolling. But my one rule is I want this 200 to be going up and to the right. Okay. And this one is either sideways to down. And so, because the reason you want that is in case you get in here and you come and you cross it again down here, you're below that area. You want to be, when you get into the 200, you want that 200 rolling up. So when it comes down, you get out, you're above it. So this one here, because it's already above it and it's where it's at, it doesn't interest me at this moment to get in. I'd have to wait till it got under that 200 and that 200 started rolling in the upward direction. XLK, yeah.
When you look at like energy, and energy is so many different level like subsectors in it, because energy it starts from exploration, drilling,
Yep.
um, whereas XLE it's Exxon, Chevron, it's all the big boys, right?
It
So
has all, yeah.
if you were looking at it from the perspective of XLE as sort of the end point, and you started more on the driller side or the exploration side, excuse me, you bleed up into the XLE moving higher, kind of, if that makes any sense.
Yeah.
So, and I think that's when I look at energy and I look at the demand of energy on our systems going forward, we have been so behind on exploration and drilling in the energy world since I think it was like 2014. We've seen less CapEx spending in that area as we come on with these data centers. And I mean, I just saw where um, Amazon has a data center in Indiana now that's it was at 2.2 gigawatts, or I think that's the number. It's some astronomical amount of energy that it's going to demand. The demand is equal to 1 million providing energy to 1 million homes. So I look at this and I go, is Exxon where you want to be starting? Is that, the indication, or is it the guy who's punching a hole in the ground and starting to tap, reservoirs of natural gas and oil? Is that sort of how you bleed up into an Exxon in the long run?
I think Exxon, and I lived in oil country for a while. Exxon is from cradle to grave in oil. They do exploration, they do all that. They do piping, they do everything as far from what I
Sure.
know. So you're going to get the whole package in Exxon. Um, and so what you said about, you can break it out, down to a drill, or you could break it out down to, the guys who make the pumps for the wildcatters, if you want.
Oh yeah.
Uh,
Well, or the pipes.
the pipes, yep, all that.
Yeah.
So it's a huge, huge industry. As if
Yeah.
you watch, what's that? What's the movie with Billy Bob Thornton in it? Landman. Yeah,
Landman.
yeah. With
Yeah.
Exxon, I look at Exxon, and there's different rules that I use, and you say it's above the 200 here, but it's heading down. Okay, so I don't like that. You also have MACDs that are down. I don't like that. I have have a set of rules for trading this. So look here. Okay, you got up here, but I got in here. Not really, because it's still heading down. Okay, I don't. So
Mhm.
I put this line in, this yellow line, to show you where it started to head up. And so then I start looking, okay, it's starting to head up. Where would I get in now that I see, we're getting this momentum on the 200? And I would go down, I'd start using other indicators like here, okay, right where we cross on the MACD. That might be a time to get in. I'm up, or any in this in here. And you see it'd still be in there on XLE. Big old volume here. So I'll put those rules out, but you just don't. The 200 itself is not what I just used. It's the starting line for me to get in or out of these stocks. And again, I'll put the rules out, but I use oscillators and I use one basic moving average. Sometimes I'll throw the 50 in there too. And let's do that. Let me throw the 50 in here. If you don't know how to do it, you come up to you can come up the simple moving averages and it'll add it in up here and it puts it on the 20 on mine. So I'm going to modify it if it'll let me. I'm going to come down and I'm going to put 50 in. And I'm going to change the color to orange because for some reason, orange is my 50. And so sometimes I'll come in, I'll use the 50 because the other thing that I want is I want the 200, I want the 50 to be over the 200 also because that's a golden cross right here. Okay. That could have been an indicator also to hop in at that point. But again, I would have waited probably in this area just to get some other indicators, but you can see how the 50 becomes a level of support also. And so sometimes people will get in at the 200 and then they'll use the 50 as a gauge to maybe get out. But here you look at that. And I see this a lot where the 50 becomes support once you get above the 200. And that's why I like to have, if I'm going to get in on an investment, I want to make sure that 50 is above it because it's a nice level of support. And I want to make sure my 200 is rolling up and to the right. So, again, I'm looking at this. I'm looking, if I use the 50 and I'm seeing this starting to roll, this might be a place I'd pop in when it hits the 50, So, but I'll put those rules out by the first of the year. And so you guys can see what I use to kind of help me technically on an investment, just using basically the 50 and the 200. Okay, the other one was XLI. Okay, here's XLI. Okay, so XLI has been above the 200. So if you're trying to invest on this, you may say now, okay, I'm way above it. I don't want to wait for it to come back to 200. You may use the 50. Okay, but again, you can see it does come down below it, but it does bounce off of it. So that's just up to your personal trading plan. I'm going to go back 1 year and see when this thing crossed over. Yeah, here we crossed over the 200, but again, we didn't cross over the 50 till this area. You can see that sideways motion. And then once you got into this level, you're like, okay, now we're up. We've got a moving up to the right here. And you got in and you just go. And you could use this as a gauge to get in or out, but you can see what level of support you normally have on the 50 once you're above the 200. A little bit of a down here and then back up at it. So XLI, if you're thinking to get in it, then use kind of a trading plan and maybe use the 50 and see if it bounces off that and then have tight stops on it below in case you get one of these. So again, you can use it for investments, but normally, you have one trade. Let's just say you use the 200. Here's your trade. You're still in. Okay, one trade way back in May on XLI. And then XLB was the other one you had. This one's a little more difficult. Look, it was under the 200, the 50's under. Here we had the crossover. Okay. But we can see where the price action is under the 50, and then it came above, then we're back down. But it's this one here, this is materials. Okay, so materials are kind of like energy. They're very volatile. We just saw it. Trent and I went over the charts of silver and all the materials. So these you may want to get into, and it's really up to your risk tolerance on these. And you look at the 50s come down. You don't want to see a death cross on the 50 on here. That's not a good thing for materials or any chart that you see. So again, is this a place to get in? For me, no, I'd have to wait. I'd have to wait for me personally. But let me show you something else. Okay, let me get out of this and bring this back up. Let's see if I can find it. Yeah, right here. And share this. So that's kind of why we developed this tool here down at the bottom. If it'll go, here we go. Just on the 200. Okay. So here's your sector portfolio, and here's your XLB. So I got that as a yellow, an orange. That's cautious, energy cautious. These were out. XLP, XLRE were out. So you can kind of see, I put in here where the 200 is, where it's at today. You can see how far above you are on the 200. So now if you wanted to look, here's XLP and XLRE. And let me move out of here, go back here and, show you and get you back in so you can see what I'm seeing. So again, these we're out of. This is XLRE. This is real estate. Okay, and this is a year chart. And you can see here was the disaster of April, and we came back up, and we never did quite get above it. Here you got above it, but you're below the 50, and the 50 just rolled for a little bit. 50 got up, and again, real estate tied to a lot of the interest rates, and then now you're just down. So again, this one wasn't, like you see an XLK that it takes off. You got a lot of REITs in here. A lot of REITs don't really trade with volatility because they 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 give money every month, and so it brings down their NAV. You just don't see that volatility, in here. And I've always said if I wanted to kind of uh, uh, get into something like that, I would just probably go, okay, here's your oh, that's the wrong one. Hold on. XLP. Oh yeah, here's our consumer staples. That's definitely off too. You can see again, um, you get into this chop, and that's where you're like, all right, do I get in? Do I get out? That's when you have to apply your rules, and then you have to set stops on here. So again, not so much what I like to see. SPY. Just look at the SPY. Here's your SPY. Okay, we got in May. You could ride that up, or you could wait until you get the golden cross and hop in there, and use this as a gauge on the 50 too. So, but if I go and I look, I'll show you this one more time, then I'll be quiet because I'm talking too much, and get back into here and share this. So when you break up this, these are the sectors of the S&P. Okay, and you're going to have the ups and downs. And here's your average. If you had just to do all this, here's your average for when you got in and got out, 10.1%. So I use this as analytics, and I go up. If I just got in the S&P itself, I'd be up almost 6% above that instead of screwing around with trying to hit all these down here. Unless you really want to try to hit these, like, here's your communications, and you got your technologies. Those will be up and down. Maybe you go play a couple of those, but you're really safer just coming up here, and you're making more with less work. Just going into the SLP. If you wanted to do that, or the Dow. You know, and even this is the one I like to use, the ITOT. It has 2,500 of the top stocks in the U.S., and it's just easier for me to do. Sometimes it's usually right along with the SPY. So hopefully that answered your question and how I kind of look at it. Maybe it didn't. I have seen here. Let's see. XLE holds more than two companies. 10, but well, XLE holds way more than two companies. I got a whole list of the companies that XLE holds. Yeah, so that's like, I got a list of XLE. Yeah, it holds way more than two companies. So anyway, that's what I got. It's 8:30 on holiday day, Monday. Trent, you there?
Yeah,
Okay, there
I
you
think
go.
I think
I
what
lost everybody.
something that I look at is looking at where things are headed and where do they start and what are the indicators that start. You know, if you just use the SPY or the Qs, I mean, there are areas in those ETFs or those indexes that are leaders into what is coming down the road. And so
Right.
when I look at where we are in the world and the economic phases, there are little things that are indicating possibly where money is going to flow to. Um, and so when I look at these phase changes, I look at it from the perspective of, I want to identify gold in 24. Okay. I want to identify where potentially oil and gas is going to be in 27. And so if I can identify the little things that trigger those big moves, you know, you look at Russia, India, China, all the central banks throughout the world, they have been accumulating gold at a pretty steady rate since 24. Well, why are they doing that? Could it be a concern over um, it could it be a concern over the fact that the United States has 38 trillion in debt, that we've got 9 trillion maturing next year, and they're looking at us going, these guys are going to hit a wall, so their confidence level is moving elsewhere. If we look at things sort of out longer term, um, and look at what those things where it starts. I mean, Exxon is a very diverse company. They have a lot of divisions. It's what I'm looking at is the guy who's okay. Where does this start? It does it start. Does the company that is concentrated in drilling or natural gas or making the drilling pipes and the valves, is that the guy who starts to you see the curve move higher, and then Exxon, you see it eventually come in Exxon's earnings and revenue. And that's what I am looking for. I'm looking for these changes in the phases of our global economics. You look at what China's been doing, or not China, Japan's been doing with interest rates, and they're concerned over inflation since July of 24. All of a sudden you see the yields on their twos or tens, their 30s and 40s are going through the roof. And now you're seeing that correlation between money, that world of money getting more expensive, the yen getting more expensive versus the dollar. And you go, okay, what's happening there? How is that correlating? And so when I look at these, you can look at the broad index, but if you really just drill down to the smaller pieces of like, so energy or aerospace or healthcare, there are little things that can give you a leading indication of where money is flowing. Because honestly, it's, when BlackRock decides to make a move, or Vanguard or State Street, who are the three biggest you know, money managers in the world, decide to go to an area, they go in little at a time, and you can see some indications. And I think that's something to consider as we go into 2026, is where is that money going? I mean, the Nvidias of the world have all gone sideways since what, September? So what does that mean? Where is that money going? If the BlackRocks of the world were getting into the Nvidias in 2020, 2021, 22 in a bigger way, that would have been a leading indicator of, okay, something's coming that we don't know anything about. And that's where I look at the phases of our economy, global economy are at, and I go, okay, where are these little crumbs that can give us an indication of where money is flowing? So one, we can avoid losing a ton of money, but two, capitalize on where that money's going and capitalize on it. And gold and silver are prime examples. Now, granted, silver may be being manipulated by a handful of these guys, but it gave you some indication a year ago. And so it's like, okay, how can we prepare for 2026, 2020, and capitalize on it, and then add alpha to our portfolios by identifying the companies that are setting up on like a more of a longer term or intermediate to longer term swing trade kind of thing. And I think that combining the technicals with the phases in global economy is is something we have to bring to the table, but we have to take a look at as part of our process.
Well, yeah.
Because I mean, that's how you risk manage. That's how you protect yourself, but also make money.
Well, yeah, we got to incorporate, and that's why we talk about macro issues every day. And when you look at what happened, why are gold being accumulated? I think it all started when Russia invaded Ukraine, and then being the reserve currency of the world, Russia had a lot of reserves, in our country, and it all got frozen. And all the other countries looked and said, well, if I do something they don't like, they're going to freeze mine too. So I don't feel safe anymore having my money in the reserve
Very
currency
good
of the
point.
world. Um,
Yeah,
and so yeah, then you started seeing the BRICS organizations. Russia got together with China. Well, let's start our own. Well, part of that I think is accumulating gold so that they have something to back their currency with to compete with the
yeah.
U.S. currency. Bitcoin, same way.
What
Why did Bitcoin come up? Because of the same thing. They're worried about U.S. being the reserve currency in debt. More than what your point was, Trent, in debt. You know,
Yeah, I think
it's,
I think we as a country are a little bit vulnerable to outside countries because of some of our behavior. Your point about, freezing assets of other countries, I mean, that's a big deal. Uh, you know, and if I'm another country, I'd be like, I,
that's what they
like you
said.
said, yeah, I'd be like, I'm not gonna get hung out to dry. And I think that's where, if you look back in history, has this happened before? And are we just repeating history, or is this something brand new? And I think that's when I look at, we could easily be at hostage with because of energy, because we do depend on energy from other countries, from, the pricing by OPEC and all that. And so I look at that and I go, is there an underlying concern that we need to become energy independent again? And we're going to also strain our energy, our energy sources in infrastructure. Are we going to see a buildup in those areas? And my thought is, yeah. I mean, because we haven't had an expansion in energy for a long time, and now we're putting on more of these energy sucking data centers uh, that eventually will strain the grid. So why would we be building that out? And so looking for those little crumbs that give us that opportunity to say, hey, we're seeing some behavioral change here. Could be an opportunity. Let's keep an eye on it. And I think that's how I look at all this is money goes somewhere. And when it runs out of value, it starts to behaving very oddly. And I think in a lot of ways, the NVIDIAs of the world are behaving very oddly, especially if everything everybody's saying about AI is going to happen. Why is it going sideways? Why is it not going up? Where is the money going instead? And I think that's the one thing I look at it from that point of view.
Okay. Um,
Yeah.
Kanaka asked if maybe you could help him with something setting up. You see it in the chat there.
Okay.
It's like two up in the chat.
Okay. Please join the group. I need a quick help to get started. I'm almost there. Yeah, here I'll share my contact. Um,
So Trent's going to put his contact information in, so you'll be able to contact Trent, and he can help you with your questions.
yeah. There we go. So, and this is for anybody. It just text me, and I think as we get into the first year, I think we should do a sort of a technical where to start, how to use the website, how to use the Discord, solve some technical issues. I'm traveling today, so if I don't respond to you, I'll get back to you definitely tomorrow. I'll be home again and go from there. So yeah, thanks for joining. All right, you
All right.
wrap it up there.
Yep. So we have
Right.
one more meeting tomorrow, and then we're done for the week for the holiday.
Yeah.
And,
We'll be back Monday, Tuesday next week,
yep. And then we're done for
and
the
then we'll
week.
be off until the first of the year.
Yep. All right.
We'll
You
go
guys
from
be
there.
careful out there. Remember, big boys aren't there, so you're playing amongst yourselves mostly today.
All right, y'all have a great morning and afternoon, and we'll see you tomorrow. Y'all live loud, enjoy the holidays and your fams. Take
Thanks.
care.
Yep.
Thanks, Fred.
Peace.
Peace.